Welcome to the Deep Dive. Today we are cutting through the noise with the StockGuru report, the Turkey Coma edition.
A very fitting title for this week.
It really is. Our mission is to give you a shortcut to understanding this major psychological shift happening in the market.
Yeah.
I mean, we are officially done with the easy money phase of 2025.
Yeah.
It feels like we're now firmly in a discerning selection phase.
We are. The market is acting exactly like a massive Thanksgiving dinner.
How so?
Well, we had the gluttony, then we had the post-meal nap, and now everyone's just sort of staring at the leftovers, not sure what to do.
And the speed of this change is what's critical.
It's everything. The core insight here is that capital is rotating, and it's rotating fast. With the shortened Thanksgiving week ahead, liquidity is, it's just drying up.
Which raises the risk for who, specifically?
For retail traders, mostly. Anyone trying to catch a falling knife right now is in a dangerous spot.
Okay, so let's unpack that shock. Looking back, last week was just a sea of red.
Oh.
The Nasdaq led the losses, down by, 2.5%. But the real headline wasn't the drop itself, it was the why.
Exactly. This was a classic test of sentiment. It asks the question, when is perfect news actually bad news?
And the answer was Nvidia.
The answer was Nvidia. NVDA beat earnings and they raised guidance. I mean, that's the kind of news that typically sends a stock soaring.
But it fell.
It fell. And that is the textbook signal of peak sentiment. When even perfect fundamentals aren't enough to drive buying, the top is usually in, at least for a while.
So that rotation you mentioned, it sounds less like a confident move and more like a bit of a panic?
I'd say so.
Is this sharp move into defensive bunkers like healthcare XLV or utilities XLU, is that a real long-term strategy? Or is it just a hedge because the Magnificent Seven stumbled?
It's the default safe trade right now. Money is fleeing that dazzling growth and just looking for predictable dividend payouts.
Which brings us to this week, the shortened week.
Right. And we have to issue a serious warning here. The combination of low liquidity and high algorithmic volatility is, it's a dangerous mix.
And just a reminder, Thursday is closed for Thanksgiving, and Friday is a half day, closing at 1 p.m. Eastern.
Yep. Don't get caught.
The calendar is just so critical this week. The Fed minutes land on Tuesday.
And the market is desperate, absolutely desperate, for any hint of a pause in their tightening policy.
If those minutes don't deliver that message...
that recent relief rally could just vanish instantly.
And beyond the Fed, you've got this scheduled data dump.
That's the bigger risk, in my opinion. You have backlogged reports, PPI, durable goods. If there's any unexpected inflation hiding in that release, the whole stabilization narrative just falls apart.
And this is all while the 10-year Treasury is still stubbornly high.
It's sticky, hanging around 4.06%. It's not helping things.
So, okay, let's talk strategy. The Guru report details 3 specific playbooks here, and it stresses that selectivity is everything right now.
You can't just buy the index.
For the conservative investor, the move is the bond tent. They suggest using risk-free tickers, like SGOV or USFR. The goal is just to earn some stable monthly income and wait.
Just park your cash and get paid for it.
Exactly. And they also suggest a hedge into XLV, healthcare, because those valuations are historically pretty cheap compared to tech.
Okay, and for the balanced trader, the recommendation is a strategic, patient re-entry into Nvidia.
So the AI story isn't dead?
Not dead, just paused. But you absolutely do not chase it here. The specific advice is to set a limit buy order at $178.
Why that number?
It's a very strong structural support level, a previous breakout zone. You let the price come to you.
And then there's the aggressive trader, the high-risk play.
Ah, yes.
A long straddle on Best Buy, BBY, around its earnings on Tuesday. The options market is pricing in a massive move, like almost 10%.
Which means a flat reaction is unlikely, but you have to be warned.
About the IV crush.
The IV crush, exactly. If that stock stays flat, right around $74, the drop in implied volatility will just annihilate your premium. It's a terrible way to start a holiday.
So the ignore list is just as important.
Maybe more so. Skip the short-dated weekly options this week entirely. Theta decay over the holiday will kill you. And avoid those unprofitable soft stocks. Anything with a PE over 50, that's just a bet on hope.
The guru's final wisdom feels very true for this moment. Bulls make money, bears make money, pigs get slaughtered.
And the risk right now is being a pig. Getting too greedy on the AI hype when the market is clearly punishing that kind of exuberance.
So what's the one action item for our listeners on Monday morning?
It's simple. Check the VIX. If the volatility index is still above 20, you have to reduce your leverage. Cut your position size in half. Prioritize survival over glory.
So, a final thought to leave everyone with. Given the market's extreme negative reaction to perfect news from NVDA, what other perfect news situations out there could trigger an even bigger reversal? If sentiment has truly peaked, what's the next big tech stock that's going to fall in great results? Something to think about this week.